A Western-led price cap on Russian oil entered effect today, drawing the ire of Moscow and adding another kink to global oil markets. The European Union and G7 nations agreeing to a ceiling of $60 a barrel over the weekend. Under the new rules, Western shipping and insurance firms must abide by the price cap for future transactions. Moscow vowed again on Sunday to stop all oil sales to nations participating in the cap. All right, for more, let's bring in Mikhail Krutikin. He's an independent energy analyst. Welcome to the program, Mikhail. This price cap is meant to curb Russia's wartime revenues. Will it?
Yes, it definitely will. We already see that the Russian officials responded to the price cap and to the embargo today with the two declarations, and both declarations are absolutely meaningless. First, they said that they are not going to deliver oil to the countries that join the price cap scheme. And those countries have already stopped importing all Russian crude oil. So it doesn't make sense to make such threats. The next threat is from Russia. Russia is going to decrease oil production and thus influence the global oil market in response to the new measures. Well, if Russia cannot sell its oil, oil companies in Russia are already decreasing production without any, special orders from the Kremlin. This is a natural process.
Mikhail, what about big-time customers like India and China and Turkey? Would they be able to sort of jump in and just buy more of Russian oil?
I do not think it is possible. First, for China, there are transportation bottlenecks. And China cannot receive more oil that it has been receiving for several years before, which is limited to a slightly less than 2 million barrels per day. And the country is just unable to increase its intake of Russian oil. As to India, it is also under pressure of possible sanctions. And the regular suppliers of crude oil to India, such as Iraq and other countries of the Persian Gulf, are already promising to offer discounts, which would be about $10 less than the Russian price of oil. And so India alone cannot compensate the loss of the European market. Yes, Turkey will take some additional oil, but not much.
You mentioned there, an EU embargo of Russian oil shipped by sea is coming to effect today. So how much of an impact does this have?
Yes, Russia has, problems with exporting that oil which the European countries, the G7, the United States, are not going to accept. And according to some rumors, Russia is buying some obsolete and very old oil tankers and provided them with insurance by Russian companies to keep transporting oil to outside markets. But first, such markets, I do not think that they exist in the in the scope that Russia hopes to sell its oil. And I think there will be just occasional attempts to to break the rules of the G7 and the European Union.
Mikhail Krutikin, energy analyst. Thank you. Now, as we just discussed, along with a price cap, an EU import ban on Russian oil delivered by ship has been in effect since today, meaning new shipments will be embargoed. Crude that's already underway still be accepted. Here's more on the likely impacts of this move.
An oil tanker on its way to a European port, a sight that should become rarer in the weeks ahead. As of December 5th, new Russian oil shipments to Europe are officially banned. The move is the latest EU effort to target Russian fossil fuel revenues. More than 2/3 of Russian oil exports to the EU arrive via sea, but soon no more. Germany will continue to import Russian oil through the Druzhba pipeline, but only through the end of the year. Hungary, Slovakia and the Czech Republic will also continue to rely on pipelines. They argue they have no alternative to Russian oil. The widespread boycott is a reaction to Russia's ongoing war in Ukraine. So how is it affecting the market?
Substitution was already quite successful. I mean, oil is a fungible commodity. So basically you can sell and buy on the world market, and that's what Europe did. Basically, it bought oil from other sources, just as Russia tried to redirect its sales to other buyers.
Brent crude was trading around $40 per barrel at the beginning of the COVID-19 pandemic. It soared to $120 a barrel last summer before falling below $100. European reserves are bursting at the seams. New supply contracts have been signed, and oil prices are declining.
And that has basically to do with two things. The first is the fear of US and Eurozone recession. So the slower economic growth, which would lead to less demand for oil, that's pushing prices down. And the other aspect is the Chinese lockdowns.
The ban has ripple effects. An end to Russian oil flows will be a huge problem for PCK refinery in the eastern German town of Schwedt, which was supplied via the Druzhba pipeline.
There is a replacement pipeline from the Rostock harbor coming to Schwedt. However, it only has about 50% of the capacity of the Druzhba pipeline. So this question has yet to be answered by the German government, how they're going to proceed to to keep the refinery running.
But even if the refinery in Schwedt operates at 50% capacity, Germany's crude supply isn't at risk. Plans call for gas stations to be supplied with petrol and diesel from other European countries.